Howdy, folks. Dr. Jeff Camarda. It's Wednesday, May 13th, and sad, I guess, not surprised, but sad to report we did, in fact, see a pretty significant sell-off on Wall Street today. Between yesterday and today, the Dow's down something like 1,000 points, and of course, there's no way to tell for sure, but I think this could be the beginning of a significant down leg that we've been expecting. Or I've been expecting, and most of the board, I think, agrees. And, some folks have wondered, gee whiz, Jeff, the market's rallied and so forth, and it's hard. I got to tell you, it's hard, being steadfast in a particular belief based on the mosaic of data and seeing the market go the other way. It's really, it's tough psychologically. But why, am I so bearish? And why have, I espoused this market timing ethic so late in my career? Because this is unusual. I'm a fundamentalist, buy, long-term hold kind of guy. Those of you that have known me for a while and discussed and sometimes debated with me, that is over the long term. That it not only is a textbook de rigueur, but it also is backed up by the data over very long periods. Why is it so different this time? And why am I so convinced that the markets are going lower? And you got to remember that the markets are a function, pricing is a function of individual human decisions, sometimes aided by computers, but, and people make decisions not very rationally often, but based on emotions and how they feel. And, as we look at this new COVID economy, this new age, it's really a dark tunnel of uncertainty. Nobody knows exactly what's going to happen. You can't extrapolate earnings from last year and dividends and expect, reasonable extensions of past history. It's a great unknown. So, when the decisions and a worldview that I've constructed is not based so much on the economic data that's coming out, because it really is garbage. I mean, we don't know what's going to happen and how things are going to change. But I look at the mosaic of health trends and what's happening, with new cases and cities and economic data from here and there and try to put it all together and integrate a picture in my consciousness of where it looks like we're going. And I got to tell you, the data just portend really, really, really bad news that I don't think is even close to being properly priced in the stock market. And, there's a number of pundits now that the market has gone down, or kind of agreeing with that, although 2 days ago they weren't. But, things are being said like, gee whiz, the most overvalued market in my long career and stuff like that. And it may be true. The market was rattled, by the honest assessments, I think, of the Fed chairman and Dr. Fauci about, where this may be going. Powell said today that, the Fed can only do so much. And they are cranking. I mean, they have opened up the spigots and gushing cash. And that may not be enough. And saying things like, gee whiz, we can handle the liquidity problem, but not the solvency problem. And what does that mean is we can put money in the hands of companies, but if they keep losing money because nobody's buying stuff or they can't operate, eventually those companies go out of business. They become insolvents. They've got to generate revenues and profits. Otherwise, they can't get the money. They can't pay the money back or continue to operate. So anyway, that's probably more soapbox than you wanted for this Wednesday evening. But, we are trying very hard, and this is a difficult time to be an investment professional, especially, one that takes it as seriously as I think we do and feels such a moral commitment to the prosperity and the health and the solvency and everything else for our clients. It's a tough time, but, sticking to the guns is not really very easy, but I think in the long term, it will be the most profitable strategy in the wisest way to pilot us through these just raging, dangerous seas that we find ourselves in. So anyway, that's enough about that. One other thing I'd like you clients, Camarda clients, to think about is, we are at a time, our strategy is we're, largely to cash, got a lot in cash now, happily that we are there. And if the market continues to go down, happier still we will be. But the objective is to look to buy quality things that are well suited to survive and prosper in the new COVID economy, to buy these things at cheaper prices that we expect to see. No guarantee that will happen. but I'm convinced that it will. And ultimately, sad to say, because it's on the back of a lot of misery, but ultimately I think we'll make a lot of money on this, and that certainly is our objective. But clients, think about, especially those of you that are tax sensitive in non-tax deferred accounts, like not in IRAs or 401ks, and most of us have some nice, capital losses that we'll be able to offset gains with, but we may be a bit more trade prone and trigger happy to take profits where we see them. That was a point of the debate in today's portfolio board meeting, and just to go ahead and take some profits where we can see them. So please think and discuss with your personal wealth advisor if you are willing to pay some taxes, maybe to book some gains in these very uncertain times in markets. Okay, enough of that. Sorry to be so long-winded. Until tomorrow, yes, until Thursday, May 14th, I bid you bonsoir. Good night.